Good afternoon, everybody. Mike Tedeschi, investment strategist over at Perspective Wealth Planning with this week's market recap video. We're going to start with the major 4 U.S. indexes. We're also going to take a look at the U.S. dollar and bonds as well as gold and some breadth readings. So let's jump right into it here. First, we have the Sp500 Index, and here are all the lines that we subsequently have drawn over the last couple of weeks, the major levels of support and resistance that are on these charts. And as you can see, last time we spoke, we were under this resistance zone, and we subsequently have pushed up higher, so we can go ahead and add a new line of resistance, which is right there at that all-time high. So the action that we have seen here over the last week or so has been bullish. We have broken out of the range that we had spent the better part of a month inside of. We're back over the 10, 20, 50, 200-day moving average, and we are just a stone's throw away here from all-time highs on the S&P 500 percentage-wise at this point, less than 8%. So bulls really need to get that push through those all-time highs. One of the things that we always talk about is potential false breakouts, i.e. you get a small move over and make a new high, which does not hold. So not only do the bulls need to make a new all-time high right here, they need to be able to hold that zone here for a little while. And let's take a look at some of the upside targets. So taking a look at a shorter time frame fib extension, we can go from the low of that last range to the break out of the range right here, which really happens in there at that 2950 zone, and that would give me an upside target of about 3100 on the S&P. And if we were to do a trend line, right, and connect the highs, that would also kind of, if this took about 2 weeks, would be in conjunction with the upper end of this zone here as well. And you can see another way that you could look at the S&P 500 right here is it is really trading in this upward channel. So let me go ahead and remove a lot of these horizontal lines so you can see exactly what I am saying. This is what we have had now for the last 6 months or so. So top of the channel, bottom of the channel, top of the channel, bottom of the channel, and those lines are parallel. So you would be expecting, if we did break those highs, for us to run back up towards the top of that channel, and that's that 3100 zone. As always, we'll pay very close attention to what happens if we do make those highs. Can we hold on to that zone? Will we ultimately roll over? That is, of course, a very important question. Jump in here. Let's take a look at the Nasdaq. Very similar setup here on the Nasdaq as well. Just a stone's throw away here from those all-time highs. Doesn't have the same cleanness that the S&P does in terms of its channel, because look what happens if I duplicate this drawing and try to drag it down, right? It doesn't work the same way it does on the S&P 500. This is actually much more of a wedge than anything else, is kind of how I would see that technical pattern there. So new high would also put the top end of this wedge in play, which would be about that 8100 level. That would be, in my opinion, the most important zone there for the Nasdaq if it does make that new high. Now the Dow Jones Industrial Average, right? Let's go ahead and clean everything off here so we have a fresh chart before today's analysis. But if we take a look at the channel here, it's like the S&P 500. It's much cleaner. So if I go ahead and drag that down, you can see it's a very clean channel, and that really has been what we've traded in. And of course, we have that all-time high resistance zone there. And then if we were to break above that, that next target, depending on time, would be somewhere about that 28,000 level. It'd also be a large psychological level that we would need to pay attention to. Now, we still have the lagger, the Russell. Now, it had an explosive move in the beginning of this week where it was up over 1%, 3 days in a row. So and I'll zoom in here, 3 very bullish candles after it kind of broke above this range right here. But when we back the chart up, as you can see, we are still not over the highs from earlier this year. So we're not even close to talking about all-time highs. We haven't taken out these highs here, and then we're still, from where we are at this point in time to that all-time high, we are still about 10.5% away. So really, if you want to look at this, maybe we've just got just that Darvis box. This is probably the cleanest way to take a look at this zone right here. We have traded inside this range now for pretty much the entire year. After the false breakdown there in December and the rally back up in January, we basically traded inside that range. And if you extend that range off, we really traded in it for the majority of the latter part of the previous year. And actually, if we go ahead and once again extend this backwards, you can see this was the zone we traded for the majority of the 2017. So really, in the last 2 years on the Russell, we spent a couple of months above it as a false breakout. We spent a month or two below it as a false breakdown, but we have spent the lion's share of our time between that 1450 and that 1620 level. So really, really important for us to get above that 1620. I think for the bull case, for the overall market and everything to continue, I think you need participation out of the mid in small caps. If we stay inside this range, it's going to be difficult for us to really rock and roll and have a strong breadth move forward out of the overall market. Speaking of breadth, here's the Nasdaq Summation Index. We talk about this. We have a bullish crossover which took place about a week or so ago. We are still underneath that zero level, but really, another day up on the Nasdaq would push this back over that zero line. And if you want to kind of draw some lines here, that would be a potential breakout for basically a year-long potential bullish falling wedge on breadth reading. So could be very interesting to see what happens there if we get another couple of days up. I think you have that nice breadth reading that should push forward. Now we take a look at the New York Composite Index as a whole. All right, we're still a ways away from those all-time highs, but we have had basically a very strong resistance at that 13,200 level. We're very close to that. That would be the important zone for us to get above. And on this one, the target would be, if we were to break above that, would be those highs from the previous year. So that'd be about that 13,640 level. Let's jump in here and let's take a look at the dollar index. The really important level that we have been paying attention to right in here at about that 98 zone. You can see it's the middle of the range that we've traded in for the last 5-6 years. We have gotten above it. We have stayed above it, and we are back testing it. But if we look at this on a short-term basis, you could say there might be a short-term potential head and shoulders where you have those three peaks move back underneath. And again, you'd have to break the neckline on this, which would be kind of this diagonal right here. You need to get back below that, really that 50-day moving average at about 97.8, and that would be a bearish sign here for the dollar. But as long as it holds over this 98 zone, it's still trending up. We still have a series of higher highs and higher lows at this point in time, so it's hard to say anything really negative about that at the moment. We take a look in at bonds. Bonds have had a rip-roaring year. From the breakout there at the beginning of the year, bonds have rallied up. But the last couple of sessions here, we really have come off, and we've run into multi-year resistance there. And you can see that resistance playing out back in 2015. You can see it being a very important zone once again in 2016. And here we are coming right up to that zone and failing. Now, this doesn't mean this is ultimately going to break down. We very easily could just get a back test of that breakout that we had a few weeks back there at that 157 zone on bonds. So if we were to get a hold right in around this zone and a move back up, we really would need to be watching for that break over this high. Let's put it in a couple weeks back for that move to continue to the upside. We take a look in at gold here as well. Very similar chart to bonds this year. It has they've tracked very closely to one another. That is not always the case. That just happens to be a correlation here for this year. But what I really wanted to do, and I want to clean this chart off. When we take a look at gold, we got above that 70 RSI on a monthly basis. We have now dipped back below it. We still have until the end of the month for that reading to ultimately come in, but we have failed right at that 1560 zone, which when we look on a monthly basis was a really important level going back to 2011. It was support in 2012, and that is ultimately we broke down from in 2013, and we have not been back above it since then. So the bulls really were hoping that we would get back up over that zone and push over that 1600 level. That would be the key. This chart did on a weekly basis get very overbought. It's still over that 70 RSI reading. It's not broken at any point yet. but it would be very normal in the course of things to have that breakout, fail out of resistance, have a back test of that breakout level before ultimately going and pushing higher, or potentially this being a failure zone and pushing lower. So we're paying a lot of attention to gold and bonds here, as well as the dollar, which obviously always has effect. I hope you guys found this video useful. As always, I will see you guys next week.